Okay guys, welcome back to the channel. This is episode 2 of my weekly recap series where I go over the whole week of trading, talk through every trade I took in detail. It's a bit of a longer video, however it is a lot of good content, and if you're interested you should definitely stick around and watch. So this is the week starting the 24th of December. I only took 2 trades this week, one win and one break even, which is very good. In my opinion, that is really good. I don't think, saying, oh, I took 20 trades or 10 trades or even like 5 trades this week is a good thing to show off. Being disciplined is very important. This week we had a bank holiday on Thursday, and on Friday we had CME, the market is shut down. So price action was very poor after that. So practically only had about 3 good trading days. And personally, for me, Monday was the only day I saw entries. So yeah, let's get started. Just before I actually get started, I'm going to talk about my indicators. So I use 2 main indicators. These are the 2. There's Fair Value Gap by Nephew Sam, it's this exact one, and Equal Highs and Lows by Out of Options. These are very good. So the Fair Value Gaps is obviously, you can see Fair Value Gaps. How do I go into the settings? What the hell? Oh, I'm an idiot. If you go to the settings, these are the settings I have. So I'll just, you can pause if you want to or customize it yourself. But basically, it just allows you to see all the fair value gaps on different time frames as well when you're on just one time frame. So it's very helpful, for spotting random fair value gaps you might not see that have just formed in a higher time frame. And then equal lows and equal highs indicators are very good because they'll pop out of nowhere, and it's very hard to track them without using an indicator because you won't be 100% accurate. So it's always good to use that as well. Right, so first let's talk about this setup. So this is actually pre-market on Monday. Obviously, New York Open starts at 9:30, but pre-market starts at 8:30. Usually I hop on around 9 a.m. Just to sort of get my bias and see what the market's doing, but this time I hopped on a little bit earlier and caught this nice setup. This was a break even, just to spoil it for you guys. But yeah, so we have this 1 minute formed. It is also a 2 minute, okay, the exact same size, and it's not a 3 minute. So just a 1 and a 2. So yeah, the 1 minute inverses on this candle. However, the 2 minute does not. As you can see, it does not inverse. We need a candle close above the fair value gap, and this is not a candle close. So this is obviously the 2 minute candle. So the 1 minute has inversed, but the 2 minute hasn't. So I did not enter here. Why? Well, because we're still respecting the 2 minute fair value gap. So I have no idea if price is going to continue going down or come up and inverse it later. So you always want to be safe and just make sure you inverse all the time frames before you enter. Just a note, we had a tiny 1 minute here. If I just go back, you'll see that price. Well, not price, the indicator does tell me we have a 1 minute fair value gap there. But yeah, so obviously another reason why I didn't want to enter is because we just tapped this, and as you can see, a very bearish reaction out of this 1 minute, and it's 50%, which is a very good sign for shorts. So I was very hesitant to entering longs. However, the next 2 minutes go by, so now this is the 2 minute. As you can see, boom, 2 minute has inversed this 2 minute fair value gap with very good displacement. This is a really good sign for longs. The 1 minute obviously did also get inversed, which is really good. If the 2 minute closed around here and it didn't inverse this 1 minute, I still would not enter because we could easily respect this 1 minute and come down. But as we inversed it, even though it's only a tiny bit of displacement, because of the previous bit of displacement on the 2 minute, I'm very interested in this long. So I entered. I got an awful fill. So my fill was literally 527.25. This was my fill because of the next candle. Obviously, I didn't, there's no way I can get that sort of a fill without the next candle being a lot more bullish. And you'll see that in a second. But yeah, my stop losses kind of close below the fair value gap, so usually a few points. It sort of just depends on the range, how I calculate that. But yeah, and my break-even point. Now, my break-even point is this high in the market. Now, why is it this high? Well, past this high is an unmitigated fair value gap. The fair value gap has been mitigated by this point, but above this point is still unmitigated. Also, a high or a low inside of the fair value gap is a very nice draw for liquidity, for price to target. So I'm definitely targeting that. Also for ES, the exact same point is the exact same reasoning, but it's also a 5-minute unmitigated fair gap. Jump, oh no, sorry, a 4-minute. I mean, if we jump on the 4-minute time frame, we can see this point is a 4-minute unmitigated fair gap. It's not been tapped into, but it's not on NQ. But still, basically, the way I'd play it out is the first one to tap that, whether it's NQ or ES. I would then put my stop loss to break even. So yeah, obviously, also to note, ES has completely inversed all the fair value gaps. You know, this big 1 minute and 2 minutes been inversed, and this 1 minute it's been closed. You know, just inversed, which isn't amazing, but we did have a lot of signs for longs. Let me actually talk about the reason I wanted to long. So we had an SMT at this point, and SMT just means that NQ have taken so in this example, ES has taken this low, but NQ has not. So it's not the strongest. If it was this low, it would be a very nice SMT, but because it's not the strongest, but it's still an SMT, of course. We're obviously respecting this 1 minute fair value gap as well. We just tapped into this unmitigated fair value gap, and look at this reaction out of. That's very good. And we also, the bias, it was a bit confusing. We were a bit more neutral today, really. We weren't really bullish or bearish. So yeah, we also had these equal lows below, which is obviously a little bit worrying to why you would take the long, but they're not the best. The further away equal lows are from each other, the better. But these are obviously only 4 or 5 candles apart, so they're not insane, but they're obviously still a draw. So yeah, so just quickly, obviously 1-to-1, that's what I target. If you don't know, get to know. Break even point here, and yeah, I would trail my stop loss when we hit the 1-to-1 target. So play price out and literally come up, tap my break even point, my stop loss is at break even, and we come straight back down. So I'm out. ES also took the break even point. ES also, what is going on with my, okay, never mind. ES also took the break even point the exact same time. So yeah, so you know, regardless if I did NQ or ES break even point, they will both be the exact same. And also, if I had the perfect fill on the candle close, I still would have been put out break even, because obviously we came down way further than the candle close. So that's for you, you know, so that's very nice, because obviously if this were a win and I missed out on that because of my fill, I would have been very angry. But yeah, play price out, and actually we do end up coming up and taking the 1-to-1, which is very annoying, but it's good because I had the vision that we would come up, and we did, but we just needed a bit of time. But I do not in any circumstance regret going break even, because price easily could have respected this. Like, look at this reaction, very bearish wick and close, and we're still wicking over here. So price is not happy to instantly come up. We tapped the fair value gap and we just reacted awfully. And then most likely we tapped into this 1 minute fair value gap, look at this wick, and we started to come up again. So personally, I wouldn't re-enter out of that, because that's just not my strat. I'll wait for an inverse fair value gap. But if that's your deal, then fair enough. But yeah, so that was a break even for me. Yeah, not really much else to say. Okay, we move into the next trade and the last trade, which was a win, and it's actually right after this, funny enough. So this one is a little bit more advanced, and I need to explain it a little bit more. It's not as simple as just an inverse fair value gap. So literally it's here, but it's not exactly here. So we have this 1 minute created, okay? Literally at this point in time, I'm not even focused on the charts. I'm actually recording a TikTok video. Check out my TikTok or Instagram, by the way, link in the bio, where I post these trade recaps daily, but they're obviously shorter content, like a minute long, but check them out. Anyway, so I see this 1 minute being inversed, and I'm like, okay, cool, but I'm not interested. Why? Well, on ES, we have equal highs, which are very good because they are very far away from each other. I mean, they're very far. I haven't even found it yet. So very nice draw. So I'm not interested in shorts. Also, it's just not high quality. We actually don't have an SMT, even though we are very far away from price. We somehow do not have an SMT. So that's another reason not to short. Also, I actually thought this inversed really well because I was zoomed in, but it didn't. Usually I ask for at least 3 points of displacement, but we only had about 2.5. So yeah, but the fair value gap is a nice size. That is definitely a good plus. But yeah, also the bias, we weren't extremely bearish. And yeah, that's really the only negatives to the trade. So I wasn't interested in this short. Okay. But the next candle, what we do is we create this tiny 1 minute fair value gap. Okay. What have I just done there? We create this tiny 1 minute fair value gap. Okay, very tiny. All right. Now, obviously, I would never take a long position out of this fair value gap. Why? It's literally under 2 points in size, so it's too small, and there's just not a lot of context. You know, we are in an uptrend, but I just wouldn't take this long. It's not that high quality, in my opinion. However, I wouldn't take a long out of it, but I would definitely look for it when we respect it. So look at this next candle. Very wicky and bearish close, okay? Excuse me. So what this is telling me, what price is telling me, is that we want to continue to come down because we've just inversed fair value gap, which is very nice. We've created a new one and we've respected it, okay? So I'm like, okay, you know, it's quite decent. So what I do is I wait for the next candle, so the minute after this, and I see how price is. And if we're sort of chopping around or we start to come up, I'm not interested in shorts or longs. However, if we do start to come down and, you know, it's a bit more volatile, then I'm definitely going to be into shorts. So this is the next candle. It's literally, I read price like a book. It's insane. You know, I'm very impressed with it. But look at this bearish candle. Practically no wick, about 0.25 of a point in wick. So it's a very bearish candle, very good signs for shorts. Obviously, you wouldn't enter off of this because we're in so many unmitigated fair value gaps, so price could easily just retrace instantly. However, I entered early. I actually entered 559. I entered here. The reason I entered here is because, no, how I entered here, sorry, is because, yeah, so I waited for this candle to start, and literally as soon as we started, we went like boom, 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 you know, we instantly very bearish reaction. So I was like, yeah, I'm definitely entering because we were very strong. I entered and we instantly came down. So it was an amazing entry. My stop loss once again is about, this was 5 points above the fair value gap, a little bit higher just because it's not an insane trade once again, but it's a conviction play at the end of the day. And then once again, 1-to-1. My break-even point for this was this low here on either side as well, NQ and ES. Why? Well, because we are tapping into unmitigated fair value gaps as soon as we enter this area. So price could easily tap it and go up. So now my stop losses are break even once we tap this. But next candle, we tap the 1-to-1. If I just move it across. So we tap, oh, actually wait, if I do this, yeah, oh, no, you won't be able to. Right, anyway, we tap the 1-to-1. So obviously I have now brought my stop loss to the 1-to-1, and then as you can see, obviously we tapped it, came back. So I'm exited. I'm exited out there. Very happy, can't complain. Price did actually come down a little bit more. So I could have easily grabbed an extra bit of R there. You know, I think it came down to about close to 3R. What did we get to in the end? So the peak is 2.8R, which you're never going to get this because how would you know that price is, you know, this is the end of it? But yeah, so you could have used that, oh, why not target for a 2R? Well, personally, I do not have lots of success with higher R plays. I feel like 1-to-1 works perfectly for me. I'm way more profitable by using this strat compared to targeting higher R liquidity. You know, price is way more consistent going to 1-to-1s than higher R. And I actually receive more money and capital from just 1-to-1 plays compared to 1-to-3 or 1-to, you know, whatever plays, just because they are very inconsistent. So yeah, that was the trade. Obviously, this was a little bit more riskier. It was a lot more of a conviction play. However, in trading, you can't just be a robot. You can't just have a checklist where you're like, okay, we have this criteria. It's 80% of my, you know, checklist model. I'm going to enter. Like, yeah, you can 1,000,000% do that, but there are lots of entries where a trade might be a 10 out of 10 on paper, but it's actually awful because there is something else, you know, that's not on your checklist, because a checklist can't be that specific. So you have to sort of know the market. Screen time is the biggest thing. You can't just, you know, instantly jump out the gates and be an insane trader. You have to put time into the game to learn what the market tells you and, you know, experience it for yourself, not just watch YouTube videos. Paper trading is insane for this because obviously you don't have to spend any money when you paper trade. Literally zero. There's no subscription you need for that. So definitely do that if you're starting out trading. And then, after a few months of live testing on a paper trading account and you've got a good amount of profits from that, then obviously go into an eval. But yeah, so anyway, that was it for the week. I only took 2 trades, like I said, 1 win and 1 loss. This was the win. Sorry, 1 win and 1 break even. This was the win. This was the break even. This was a way better trade than this. However, this was break even and this was a win. So it's what it is at the end of the day. Let me know if you guys caught anything this week. What your win loss break even rate was. If you guys trade any other strat other than IFVG. But yeah, that's it for this week. Let me know if you guys want any other form of content, whether that be tutorials or anything like that. Also, I've got a free Discord that you can feel free to join. We've got over 2,000 members. It's completely free, literally no charge in it at all. We have a bunch of learning content on that. And obviously you can talk to me and other traders like-minded in this strat. So feel free to join. That'll either be in the bio or it'll be in my TikTok bio. So check that out. But yeah, thank you guys for watching. Subscribe, and I'll see you in the next week recap. See you later.